Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Friday, October 2nd, 2020. I got to admit, there's some of these days where I know I'm going to give a commentary and I'm kind of struggling up to the last minute of, geez, what am I going to talk about today? There's not that much going on. Then there are other ones like today where I have to think, well, how do I talk about what's going on today in a fairly digestible chunk and not just make a half hour long video. Today is of course one of the latter. Um, the news flow, of course, by now I'm assuming you're not living in a cave and know that the president and the first lady, um, you know, got tested positive for coronavirus, and at least as of now, it appears the president is mildly symptomatic. Um, I would be remiss if I didn't offer best wishes, no matter what you think of our leadership right now. On a personal level, I think it's irresponsible to do anything other than wish someone the best when they're sick. So that you have that there. But that really throws things. Boy, talk about throwing a monkey wrench into the election. And markets really viewed it that way this morning. Uh, you know, seeing the futures down about 45, 50, and I'm talking S&P, of course, seeing futures down about 45 points, 50 points pre-open, it actually seemed about right. I mean, certainly at a minimum, the president has to quarantine for 14 days. Let's assume that today is the only day he's symptomatic. He, just thinking logically, he's got to quarantine for 14 days. So at a minimum, we're probably talking about the next debate being canceled. And more likely the one after that. So you sort of have this uncertainty of you had all these debates, they were potentially changing the rules of the debates with a mute button, and now all of a sudden, well, that's probably off the table. Uh, you know, and then of course there's a myriad of other problems, and you can go to the general news media for better analysis of that. So I'll try to keep it from a market point of view. So you have an election that was already considered chaotic. And this has just gotten that much crazier in some regards because I, I don't really know what to expect at this point. And I assume election day goes on as planned, but you now have this candidate who was already viewed poorly on the coronavirus issue. Viewed probably, we'll see where that view goes. So the markets didn't like that. Kind of burying the lead. Today was supposed to be the day where we found out well, it was the day, but today the story was really supposed to be the jobs numbers. And oh, by the way, those came in 200,000 light. The unemployment rate went down, but that was largely because the labor market shrunk. I think we're seeing the discouraged worker hypothesis in action. That states that when the job market is so lousy, people just leave the labor force entirely. Unemployment rate uses the size of the labor force as its denominator. So in theory, you can have worse job numbers and a lower unemployment number. Also, of course, they're calculated differently. But you can have, if you have the same number of jobs and a smaller workforce, the unemployment rate goes down. And that could have been what we saw this morning in terms of that. So that's not very good either. And you saw the markets really kind of swooning pre-open. And then I'm going to give Speaker Pelosi the kick save of the day, where she said shortly after the open, I don't know if the timing was intentional or not. Conspiracy theorists have at it, but I think it was just more, she was talking to reporters in the morning. And she said that this gives her hope that they can make progress on the stimulus. So markets, as I've discussed in writing over the past few days, markets are in love with the idea of stimulus. And so while we still see markets lower while we're taping this, S&P's down about 0.75%, NDX down about 1.25%. They're well off their lows. They've recovered, call it half their losses, a little more. And we'll see where that takes us. We'll see if stimulus hopes can really get the markets going. Now, my fear, of course, with stimulus is not that it's a bad thing, but we've been pricing this in for the better part of a week. Do we have a buy the rumor, sell the news scenario as well? I don't know. Also, taking a look at our old friend, the VIX curve. We're seeing October pop up. Makes sense because remember, that's election day. Well, spot VIX popped up, but that's obvious with the news. October being election day period popped up. It did pop up above December, but not above November. The peak is still in November. And we can go in about the possibility of electoral chaos. Who knows what happens, whether the president recovers properly or not. So I don't think that takes the chaos angle off the table, the post-election chaos off the table. But there's also a tax element to it. And remember, markets can't really price electoral politics very well. They can't price any politics very well. So you would see the VIX sort of reflexively higher because it's a way of reflecting uncertainty. That is its bailiwick. But also, don't forget that markets could be pricing in some sort of tax effect that would occur if the Democrats win the White House and the Senate. VP Vice President Biden has said that he would like to end the favorable treatment of capital gains over ordinary income, and he would like to roll back the corporate tax rate cut that we saw in the last tax law. The latter definitely affects PEs, well, affects the E in earnings, because after-tax earnings would likely go lower as a result of higher tax rates being paid. But more importantly, I think what you'd start to see is an added incentive for taxable investors to maybe take some gains prior to year end rather than after. When they do the tax laws, they're usually retroactive to the beginning of the year. So if they enact this thing in 2021, presumably it would be in effect throughout the year of 2021. And so I think you have some incentive for people to consider making sales to lock in capital gains at the current lower rate rather than risk them going up to their current income rate. Remember, most stocks are held by relatively wealthy investors, though at least in taxable accounts. And so we're talking about a potential difference of about 15 points or so. And the market that would mean that your stock holding would have to go up 15% next year to offset any capital gains. I'm not saying this is a reason to sell. I'm just saying other people will view this that way. And you should be concerned that people are thinking of it that way. And I think that's why when people look at the high levels of the November, the December, and into January and February of the VIX, I think that is somewhat as reflective of the potential for the people selling their substantial winners. Remember, we're near all-time record highs. There's a lot of winners out there, and you may get people selling it. Kind of the inverse of normal, where people do tax loss selling prior to year end so that they can get a taxable loss to write off against their next year's taxes. This one, you could have some perverse tax effects in both directions. Consult your tax attorney, and this is far from tax advice, but this is something to be thinking about as a market idea as we go forward.